Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, guys, let's get into the action-packed intraday analysis video. Right now, we have the markets across the board positive. And again, to give you quotes on this Tuesday, April 9th, 2013, it's just before 2:30 p.m. Eastern Time. S&P's up about 8, Dow's up 75, and Nasdaq's up 22 on the day. Now, there are a couple positive notes out there in terms of individual stocks. I wanted to start with First Solar, FSLR. They basically raised guidance, a very, very strong guidance midday, and look at the stock ripping here today. There's a huge short position in this, so you're getting a short squeeze of epic proportions. The stock itself is up $11, and that's actually off the highs by about $4, but still a huge, absolutely humongous move to the upside on First Solar. All other solars are seeing big pops off of this. Take a look at SPWR, JASO, which is a Chinese solar, LDK, monstrous move here. I mean, we're talking about a 20+% move on LDK. I could go on and on. WFR is another one, big pop there. Any solar out there is getting play today. And sure enough, that's all in the back of First Solar's strong Q1 guidance. Major strong Q1 guidance there. Now, ultimately, they're a little overpriced at this point, but on pullbacks, you probably end up buying them if you get PPT setups. I mean, that's really what the bottom line is. If you get the right setup, you can give it a shot. Okay, so we'll continue to kind of follow that on the solar story and see how it goes. Other stocks that are in motion today, what else do we have? Well, it's kind of a mostly positive day, but there are certain weak stocks and there's certain strong stocks out there. Goldman Sachs today would be a strong stock. This is trading at the highs of the day, up $3.13. If we go to the daily chart, it shouldn't be a surprise to see this having a good day because look at how much room before today it had before the 20 MA. So even up $3 plus today, it's not even back to the 20 MA. So technically this was a little short-term oversold, due for a little bit of a bounce. And sure enough, it is getting that bounce today. Upside potential is at least to the 20 MA over the next day or so, which would be around the 148 level. And then if it continues through that, look for the 150 level. I think at 150 you start to look for a short because that also coincides with this little pivot low area right here. So if you draw a trend line, actually interestingly enough, if you take a line here and connect it to this little high on this consolidation pattern, it actually gives you that 50 MA right there, which is kind of a cool trend line right there to see, and that's right at the 150 level. So if I was going to short this for a quick swing trade, let's say a one-day swing trade for a couple buck pullback, that would be the level I'd be doing it at. Okay, so Goldman Sachs, that would be the spot. Amazon's having a nice bounce today. Short-term, Amazon's been oversold, as you guys can see here on the charts. Let me just erase these lines here. You hit the low end of the triangular pattern here. All right, and again, sure enough, you hit that basically on Friday. Monday, Tuesday, strong bounce. I am looking as well at the 50 MA. 50 MA, little pivot top here, and plus you have this downsloping trend line right here. So really, if you see this pivot and then this sloping trend line, that's probably where the stock is going to head. All right, now I'm currently short Amazon. I'm in from 265.50, so I'm still in the money on this. Even if it actually goes right back to this area right here, I would just be break even on that stock. And overall, I still think, even though this is a strong move and we may push up to the 157.52 level, which is the all-time high on the SPY, I still overall do think that the markets have a pullback in the future. This is just a continued kind of buy the dip mentality. Volume again is anemic today, and this is the amazing thing about this. Any down days we have in the market are big volume. If you look here at the red candles, red, they almost all tower above all the candles around them. And even here, look at that candle, basically as big as the ones around it. Now look at the volume over the last 2 days. Look at that volume and this volume. Unbelievably light volume. Today we've only done 65 million, probably on pace to do about the same volume as yesterday, which is about 180 to 185. And anytime you're doing that type of volume, it has to be a little bit of a concerning factor where you're having more volume on the sell side, because that insinuates you're getting distribution, which is institutional selling. And then when the institutions stop selling for a couple days, the markets push back up to their highs. And that enables the institutions to then sell again. And that's why you've gotten this very, very choppy type action where you've gone up and then pulled back, and then they let the market float up, and then you've pulled back, and then you're floating up again. That's that kind of rounded top overall. But it'll be interesting to see as we're right at this double top right now. And again, if I go back to the intraday chart, this is a beautiful little pivot double top right here. Do we hold underneath this or do they close it above? I would say if you close above this high, you probably press up to that all-time high tomorrow, which will be the 157.52 level. In all fairness, that's only about 30 cents away from the high here. So it's only another 30 cents, and maybe you go pierce it. But overall, you should see some resistance there. If they don't close it above those highs, then you may see a little bit of a pullback tomorrow. Now, it's been quite a run on this market because you had a buy the dip mentality on this dump to about 130, 153.80. And then since that low on Friday, I guess you could call it, off the jobs number, you've basically gone straight up. So you have a move here on the spiders netting essentially 3.5 points. 3.5 points in a matter of 3 days, basically averaging over 1 point a day. Obviously, this day was a little bit more, but overall, you just continue to grind higher here. Markets continue to look very, very strong on a buy the dip mentality as we continue to put this rounded top in. Now, one stock that's struggling today, which has been struggling for quite some time, is Apple. Apple continues to be flat on the day. Yesterday it had a small pop off double bottom, but again, I mean, we've had basically 3 moves up, right? If you think about this market, right, over the last 3 trading days, Friday, Monday, Tuesday, we've had 3 consecutive moves off the lows. Friday we gapped down. We just still closed down on Friday, but you gapped down and pushed up all day. Apple again, this is the best bounce it could muster. So, as much as I like Apple, if it gets to a certain level, I bought this Apple down here and sold it up here. Okay, and now I actually don't want to get involved again. All right, this is a very scary issue on Apple, and I think the weakness, basically, this could be creating a bearish pattern, especially if the markets start to get weak again. So just be aware of that to me, Apple does not look too healthy at this point in time, and we do want to be a little bit more on the careful side. All right, taking a look at JP Morgan Chase, JPM. See JPM right here on the daily? It's right into a little bit of a necktie. That's why JPM is lagging today, because there's a technical resistance here. So you're talking about the necktie right here off of a 1-2 bar up. This is the 3rd day. And yeah, it's up 16 cents on the day, but if you compare that to Goldman Sachs, which is up 321 right now, that's a pretty weak showing. Now, if we take a look at Bank of America is not having that strong of a move, although percentage-wise it's decent, but up 7 cents, 8 cents today. It's also, notice again, technical level. So again, let me just go over this because I think this, for educational purposes in terms of technical analysis, is very important. If you look at BAC, it was right up into the 20. If you look at JPM, right up into the necktie there. All right. If you look at Goldman Sachs was not into resistance, so it's enabling the stock to run. And this is a great example of why technicals must be read on the charts, because it'll literally tell you which stock is going to be stronger or weaker based on resistance in this case. Okay, very cool stuff to see there. All right, what else do we have here? Let me just scan through. Chevron's up 90 cents. Exxon's up 65 cents. Chevron, to me, after this fall, I definitely am getting semi-interested. I think that this is going to be a shorting opportunity. In my opinion, it definitely is. I'm looking for the 20 MA and possibly just above. I'm thinking right around here, maybe anywhere between these two levels, a swing trade short might be in order. You have a little bit of a bearish pattern, a bounce pattern coming in here. And overall, again, downward move, upward play. As long as you have resistance here, just like on JPM or on the Bank of America, you should start to meet some resistance there. And again, as we've had some big bounces here, if this is the best it can muster on a move back up. So remember, the negative divergence. I mean, this is a great example of negative divergence on CVX, Chevron, because the markets are back to their 52-week highs. All right, see the markets are all the way up here. But look at Chevron. Chevron's lagging. It's only had this much of a bounce. So maybe it'll get a little bit more of a bounce, but the key is start to recognize the weaker stocks. If you could recognize the weaker stocks, you should be in a major order for great profits on the next pullback in the market. And again, the next pullback probably gets bought up again, as it's a buy the dip mentality for the time being, but still you can make money off of it. That's exactly why, last week we nailed Valero for 12% on the short side on that fall, even though the markets weren't that weak last week. EMC hit target for basically a 10% gain. And I mean, still an IBM on the short side, guys. I'm still short IBM from all the way up here, and I'm still in the money basically $2-3. All right, so again, as long as you're picking the right setups, you're in the driver's seat. You're absolutely in the driver's seat. Okay? All right, guys, I'm going to step out here and get back to trading in the Intra Day Stock Chat. I encourage you to come join us here at InTheMoneyStocks.com. Learn how to do this. Learn how to pick individual stocks and know which direction they're going with. All right, 80 to 90% success rate, that is the key. That's what it comes down to. 2 more winners last week. We haven't had any winners or losers this week. We're still in positions, but they're mostly in the money. Amazon's in the money. IBM's in the money. KR's up just a few pennies from where I shorted it as well. But bottom line is, even with the market back to the highs, we're able to still figure out which stocks are going to remain weak. And the CVX looks good to me. I mean, there's a bunch of stocks here that look very, very healthy on the short side. So, that's the key. You just have to kind of understand. Another chart I'm watching, just to give you one last one here, folks. Look at this HPQ. Same thing applies. All right, this is a great bearish pattern development. Look at how weak it is on the bounce here in the markets. So these type of things make me very intrigued for some possible great profits. Have a great afternoon, great evening, folks. Come join us here. Take the 7-day free trial at InTheMoneyStocks.com.